Hello traders, and welcome back to this video. Today I will cover our latest Forex Master Pattern Screener, which finds contraction zones and helps you see what phases are currently present in the markets. For new traders or people who don't know what the Forex Master Pattern or the contraction, expansion, and trend phase is, it is a framework for understanding the market cycles and how price moves. The first phase of the master pattern is the contraction zone. This is when price movements become increasingly narrow, and you can notice low volatility and a tightening of price action. The contraction phase typically represents a temporary pause or buildup of energy before the market makes a significant move in one direction. You should avoid trading in contraction zones. Following the contraction phase, the market experiences a breakout or expansion, which is shown by volatility increasing and bigger price moves. Institutional traders capitalize on this phase by initiating large positions in the direction of the breakout and exploiting retail traders' tendency to follow the trend impulsively. After the initial expansion, the market usually enters a sustained trend direction, where the price continues to move while favoring a specific direction. Traders witness a series of higher highs or lower lows, depending on the trend. Institutional traders start taking profits during the trend phase as the price reaches significant levels or shows signs of exhaustion. Retail traders who are not aware of this profit-taking activity enter positions and become the exit liquidity for institutions taking profit. The selling pressure from institutional profit-taking lands the retail traders who entered late on the losing side of their positions. Our indicator that was built to find these important phases in the market identifies the contraction phase and uses moving averages and also percentile moving averages to find expansions, which are marked by the blue color on the visible moving average. This indicator also analyzes multi-time frames simultaneously to find contraction zones, and you can customize this screener too. This indicator also highlights fair value zones and has sophisticated logarithmic standard deviation bands to help you find accurate reversals. In the contraction phase, prices exhibit relatively low volatility and tend to trade within a narrow range. On the chart, this appears as a period of consolidation characterized by horizontal price movement. The price may form a base or a range-bound pattern as institutional traders accumulate positions. As institutional traders accumulate positions, they often engage in market manipulation to induce retail traders to enter positions or trigger stop-loss orders. This manipulation can result in sudden spikes or dips in price that may seem irrational or unexpected. On the chart, this phase may appear as false breakouts, sharp spikes in volatility, or sudden reversals. Once institutional traders have sufficiently accumulated their positions and initiated their desired direction, the market enters the trend phase. In this phase, prices move consistently and decisively in the direction favored by institutional traders. On the chart, this is characterized by a sustained and directional movement with minimal retracements against the trend. Retail traders, observing the strength of the trend, often enter positions in the same direction as the trend, typically after it has been established. As institutional traders start taking profits and exiting their positions, the influx of retail traders provides liquidity for the institutions to exit their positions profitably. This dynamic may lead to a reversal in price direction as the trend loses momentum. This indicator is extremely customizable for both the volatility and contraction parameters and also its user interface. You can edit the volatility parameters to find contractions on different lookbacks and see for frequent contractions or expansions, to even editing the contraction boxes, value lines, and also editing the multi-time frame screener. The reversal bands where our two standard deviation can also be customized, but they are based on whatever you have your volatility settings on. The multi-time frame screener allows traders to analyze market contractions across different time frames simultaneously. Traders can customize the parameters of the screener to focus on specific time frames or adjust the criteria for identifying contractions. This feature enables traders to conduct comprehensive multi-time frame analysis and identify high-probability trading opportunities. The reversal bands, derived from statistical calculations based on volatility settings, can be customized to meet traders' needs. By adjusting the parameters of the reversal bands, such as the number of standard deviations or the calculation method, traders can fine-tune the indicator to identify potential reversal points with greater accuracy. Here I will show myself customizing the indicator and using it for a moment. I'm changing the contraction box color and the value line color. Next, I will show some trade examples you could place with this indicator and the Forex Master Pattern framework. Here you can see that the expansion phase happened, so you could now trade the reversals and extremes with the logarithmic bands and place a long trade. Vice versa, you could also place short trades with the indicator and the Forex Master Pattern methodology with the bearish pattern scenario. Typically, institutional traders would drive prices higher before unloading their positions to retail traders. You could use the contraction phase and the reversal bands to clearly capture these moves that institutions make. If you haven't yet gotten the indicator, it is part of our $25 monthly subscription, which comes with a variety of other indicators, or you can purchase it lifetime for $85 on our Patreon. Have a good day, traders, and don't forget to hit the like and subscribe button to stay up to date.